Welcome to Options Trading Authority's LOPR9 Swing Trading Credit Spread Strategy and Swing Trading Credit Spread System. LOPR9 is stated as a strategy here, probably primarily because we can use LOPR9 as a strategy, but we mostly look to use it as a system, which means we simply do the strategy over and over every time it comes up. So this system strategy, LOPR9, LOPR9, was designed to coordinate with credit spread. So this takes a concept from our binary options systems and combines it with vanilla options credit spreads, where we look to capture the profit into expiration. So we use weekly options, kids. They're very short-term options, and we look to grab the profits for a potential weekly paycheck. You can see here we have 37 weeks. All right. And the key to credit spread trading, which we'll teach you and which we do in all of our credit spread material, is to not to go for this out of the money nonsense. Okay, they used to teach in the past as if it was some gimmick that you were going to pluck off this profit just hanging out there in the distance. But you know, they never really explained too well what happens when one of those very tiny profit and very comparatively large risks trades go bad. They waste a lot of time. You have a big loss compared to a tiny profit. So now what we do is we get the ratio, the math better. Okay, we look for at least roughly a 1-to-1 risk to reward ratio, preferably better. You can target the 1-to-1, or you can actually target the 2 reward to 1 risk, or something close to that. You know, I say something close to that, just whatever you can get according to what's given on the options chains at the point in time. Okay, at a point in time in coordination with your swing entry, I should clarify. All right, so we have this performance representation here. I did it in the W's fashion because it's more like towards the binary options concept, where we do W's and L's for wins and losses, which also implies a concept of taking the trade towards expiration, okay, and just expiring it. All right, now credit spreads, they have their own issues. You have to make sure you don't expire the trade, or the stock isn't going to your trade's not going to expire while your stock is in between your strikes. You want to look out for that. You want to get rid of that sucker if that's about to happen, okay, because you don't want to deal with all the stock mess of okay, so we have our little track record here. Okay, it's not very fancy looking, right? But it's pretty neat. 20 wins to 1 loss, right? And so that's some high precision. We use a high precision type of trading strategy method. And so you could use this, as mentioned here in the bullet points, okay, for cash flow, okay? Also, you can use this as a way to take advantage of quickly rotting premium that, you know, if you're looking for a way, as you see these weekly options just keep quickly decaying away, you know, you're looking for a way of collecting that premium, but you don't want to put up the big bucks for the naked option. Well, you could use a method like this to go capture that premium decay into expiration, you know, like the binary option concept. Okay? And then as it expires in the money, or I should say out of the money here with the vanilla options, then you can just go collect all that money and keep it. All right? So now we use the weekly options. I mean, 1 week to expiration, you know, well, I mean, it's not going to always be 1 week. all right? I mean, for the same week of expiration, because, for example, if your entry shows the entry trigger on a Wednesday, well, you have a couple days left, so you can take that, or you can go out to the next week, okay? But we will try to target as short of a time as possible, but we do want to get paid too, all right? So we have to have our strikes give us the money relative to our entry on the swing, which means that we don't want to have to go out of the money in order to get too far out of the money in order to get a decent reward to risk ratio. Now, here's another interesting point. Many stocks have 50-cent strikes. And what that means for you, even though it's a low cash amount return, of course you can use more contracts, but what that means is that if you have a distance of 50 cents or 0.5 between the two strikes, you don't have a lot to clear to expire out of the money. Okay, out of the money is good with vanilla options. Remember that. Okay, in the money is good with binary options, right? So you want to expire out of the money so all the premium rots away and you get to keep it. Okay, so on a credit spread, all right. So when we have a 0.5 strike, that means all we need to do is clear 50 cents, okay, that range of 50 cents in the stock, which gives us a greater chance of taking that position totally expired out of the money, which means that we get to collect all of that premium. So I hope that makes sense. It wasn't the most smooth explanation, but so I'll say it again. If you have 50-cent strikes, then a 50-cent strike is easier to pass in the stock. So therefore, it's easier to collect that premium versus a 1-point strike, which is still pretty good, 1-point strike difference. On between the bought and sold side, versus a 2.5-point strike versus a 5-point strike difference. Okay, so it's just easier to clear, and it's easier to avoid getting stuck in between the strikes, whereas one side gets exercised if you're not paying attention. Okay, I mean exercised as in, let's say you let it run into expiration, or hey, these are whenever you're selling options, you can always have one side exercised, right, against you. But as long as the position is alive, you can exercise the other side without having to take or go obtain the stock. So, as stated here, if you're sick of swimming upstream against premium decaying against you, you may want to get on the selling side of things and employ a system strategy such as LOPR9. Okay, so we have this here. I mean, all these option systems, well, not necessarily. We have other options brands. But the Options Trading Authority, Slingshot is related to Options Trading Authority brand. Slingshot is just a style, okay, of options trading. And so that's why it's still in the logo. It's all right. It's on the site, slingshotoptions.com. Some powerful systems there. All right, but in order to get started, well, if you're not on this page here, then if you're on, for example, YouTube or somewhere else, just click on the link, or just come to Options Trading Authority, or just if you're on this page, you can scroll down and click the Add to Cart button below if you're interested in this system. If not, just contact us and let us know what you're looking for. Thanks.